Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Technical Analysis, June 9th, 2014. You're looking at a daily chart of the SPY, and basically today we have more of the same. The grind higher continues, new highs continue, the moving averages are sloping up, they're widening a little bit, which is a very bullish sign. We know differently. We know that there's a turn coming later on, not now. But nevertheless, this is a bullish market. Now, I just want to take a snapshot of what I think, or at least let you see or understand a snapshot of what I think is going to happen this week, which is I think you're going to have either one or two down days this week, and one of them has the potential to be significant. So, I think the week should probably be choppy, but if we're going to have a down day, I think it comes tomorrow on Tuesday, and if that's the case, it may bleed into Wednesday. And the second option is, and we're going to see either one or two down days, for sure one. And the one that's for sure, I believe, is Friday. And Fridays comes as a result of basically what's a lunar cycle or a full moon. And I'm not saying that every full moon the market has to be down, but when you're approaching highs, or you're making new highs in the market, or making new lows, and it happens to be even at an extreme like you can argue we are now, then usually those lunar cycles will cause a turn in the market, and they can have a pretty dampening effect. So I would look on Friday for a pretty solid down day. And when I say solid, I'm not going to put a point number on it, but I think you could be looking certainly in excess of 1% for the overall market. Anyway, so let's get back to the SPY, and more of the same. It's a float higher. There's no volume out here. The total volume today was let's see, where are the volume numbers? 65 million shares on the SPY. That's a low day, and there's just nothing going on. So, we know what's going on. The members know what's going on. We know how to play this market. There are some swing trades out there, but for the most part, we have to respect the fact that the market's grinding higher on light volume, and we don't see volatility. Therefore, it's almost like expect the expected for now, which is the grind higher until further notice. Let's move over to talk a little bit about the gold market. And, here we are, where we kind of made a low around the 120 level, like I told you guys about, had been calling for 120 as some support, but I still think we go lower. And I think over the next few weeks, I think we can grind lower in the GLD, and I certainly think that this bottom here at about 115, let's call it, give or take, is in play. And if we get the right setup, sometime in July, then we may go long gold, but it's got to be the right play. It's got to be the right setup. For now, I still think gold goes lower. This is setting up for another lower move. If we have another couple of days sideways here, I could see another move lower, maybe on Friday, maybe into next week. So let's go back to the daily chart, and let's punch up USO and talk about oil, because oil took a spike today. Crude is up at the 104 and change level, and the USO is approaching this high here at the high of 38.27, and today, let's see, the high was 38.23, so we're right about there. And then I've been telling you guys not to be short oil because of all the nonsensical reasons, but nevertheless, it was in an uptrend, and whether it's geopolitical or whether it's Middle East and geopolitical, whether it's just the chart like I see them, I think we take a run at 40. I think that oil takes a run at 40, and if we get some consolidation move here sideways for a week or so, I think we might take the ride up to 40, and then we'll talk about shorting oil if the time and the pattern is correct. So that's what I see there. I told you guys not to be short oil. I hope nobody was, and nevertheless, we're starting to see another up move in oil. So let's go back to the daily chart, and you can see that today was a nice spike up. So let's go back to interest rates. Let's go to the 10-year interest rate. Okay, so 10-year right now, today we were at we had a high of 262. So I think the high for the 10-year is probably going to be about this pivot here, at least for the short term. So anybody that is short the 10-year bond or long the 10-year interest rate, I think that you're getting close, a few ticks away from maybe wanting to take some profit off the table. If we go over and look at the 30-year, it's a very similar equation. The 30-year, I think about 350 right in this top here is going to be your upper level for the time being, and I think that's probably going to hold. And the reasoning behind that is, now pay attention, because this makes sense. If the market floats around, interest rates can bounce around, move higher, move lower. However, if the market sells off hard, okay, like I believe it will do later, like, for example, mid-July through the summer, then I think interest rates will come down again. The bond market will rally one more time as money flows out of the stock market into the bond market, specifically the treasury market. And what happens is these rates will get pushed down further. So, getting back down to this bottom area here is not out of the question if the market sells off like I believe it can, if volatility picks up and in a fierce way. So you want to be aware that if you're in the short bond trade like the TBT, which is double short the TLT, if you're in that trade or you're short the TLT, then you want to be aware that taking profit up here at about the 350 level in the 30-year, or when the 30-year reaches 350 is probably a good idea, and maybe even just take half off the table and make a break-even stop would be sufficient. So just something to be aware of. Make sure you manage your trades and your money correctly. That's three-quarters of the battle. Anything else we need to talk about tonight? I don't think so. Just go back to the SPY one more time. Actually, you know what? Let's take a look at the NASDAQ composite and see where we are, because the NASDAQ is approaching this high here, and that's at 43.71, and today we hit a high of 43.46. So, another positive day or two, and the NASDAQ composite will reach this double top. Do I think we're going to get through this double top? If the market only pulls back slightly this week and we take another run for a couple of weeks, yeah, sure, I think that this will break through, and you got to get all the bulls on one side of the boat, and just when the last bull is on the same side of the boat as everybody else, or the last bear is on the bullish side of the boat, that's going to be the time and the place to basically pull the rug out from everybody and send the market down where it probably belongs, and we're going to find out what everybody's made of during the summer months when the volatility picks up and they pull the trap door up. So anyway, that's it for today, folks. I think that's a wrap. Thanks for tuning in. MyStrategicForecast.com, common sense technical analysis.